Right, good afternoon, everybody. We should be live for the afternoon meeting. We run through this disclosure so we can jump into things. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. The position disclosure, I am out of the TQQQ from last time I had one of these position disclosures up. Not a TQQQ. I'm back in the Roku. I did keep a little bit of that marrow overnight. I probably shouldn't, but just want to kind of continue to trade it a little bit more tomorrow and see what it looks like. Probably one of my mistakes of the day. And I reinvigorated. Yeah, I saw it, Bates. I can't do anything till after I'm done with this meeting. I'll try to get done for you. I reinvigorated some of those options that expired last week, but not nearly as aggressively. Okay, so good afternoon. Welcome again to all the guests to our afternoon meeting. This is where we do a lot of our education and training and development as a team every day to improve. So we do this, 4 days a week. Friday we let everybody go as soon as the market closes. But the rest of the week we work, because this is where your improvement is really made as a trader. It's pre-market and it's after hours, I really feel like, is where a lot of trading success comes from. And then during market hours is all about executing all of the work, all the research that you have already done, and that constant improvement that you're having by reviewing your trades and everything else that's necessary for success in the business. So the way I typically do this is initially just with a review of the market. If there's anything particularly interesting, lesson-wise, that I can draw from the market or from my own trading, I review it. And then the second half of the afternoon meeting is basically a daily team Q&A. So for all the guests, that is your opportunity to ask literally any trading questions about anything. It could be about a trade that you took, a name that you're looking at, broader questions on market psychology or risk management or reward maximization or game planning. Whatever it is, we will do our best to tackle it for as long as necessary, however long it takes. All right, so here at the end of the day, the SPY's closed pretty much exactly flat. Bill called it. SPY's flat. Q's pretty flat also, up 0.14%. And the IWM is negative 1.1%. So this is kind of what we were looking for. Unfortunately, it was a relatively boring trading session today. The index SPY's here. The SPY's an inside day. There's really nothing to talk about it. It was kind of sloppy and choppy. It's Monday in front of a really big week, so not much happening really today. But we've got Fed on Wednesday. We've got the big jobs number on Friday. We have JOLTS tomorrow, which might move the market a little bit. At least as important as that is we've got Microsoft, Meta, AMD, Apple, Amazon, all set to report this week. So for a whole variety of reasons, it made sense for today to be a little bit more of a hands-off day. SPYs are in a little bit of a tricky spot, but the SPYs haven't been the real story. The SPYs have been very insulated from bigger market moves because primarily we've been trading this year through historically positive gamma, though that definitely rolled off a lot last week. I'm looking forward to seeing an updated number on that hopefully tomorrow morning. But the SPYs really haven't been the story. The story has been the Qs and everybody else. It's been the Qs and the IWM. Or if you want to look at the SPYs, it's been the SPY versus the RSP, the equal weighted S&P. It's about Mag 7 and everybody else. That's really been the story of this market. The SPYs to some degree always seem like they're the beneficiary of rotation. So if it's the 3 or 5 biggest companies in the market that are leading the market higher, well, the SPYs are going to hold in just fine and probably continue higher because they're market cap weighted. But then if money rotates out of those companies, like we saw a little bit over the course of the last couple of weeks, and into everything else, the SPYs will pull back because at this point, the market weighting has gotten very extreme in the S&P. So the market will pull back, but it's still going to be relatively insulated because they'll benefit from the other, 470 companies in the S&P moving higher when the few magnificent stocks actually pull back. So the pullback in the SPY from highs to lows, from highs of the year, which is pretty recent here on July 16th, through the low on July 25th. So a couple week pullback there is just under 5%, whereas with the Qs, it's about 9%. And I think I saw, I haven't measured it myself, that like specific to Mag 7, it's a 12 or 13% actual pullback. So the SPY is benefiting from that rotation like they always seem to. And they'll always continue to benefit from that rotation unless we see correlations increase in such a way where everything can sell. I made a quick half joke in the morning meeting today about seeing my dad over the weekend, and my dad asking like, "Oh, are you okay? I know there was a really big pullback in the market. Like, did you get hurt?" And it's like, yeah, not only was I okay, I was doing great because the S&P pulled back 5% and the Nasdaq pulled back almost 10%, but like 63 or 68% of stocks on the New York Stock Exchange were actually higher. And that's the rotation, and that is a result of market cap weighted indexes. You can see here the performance in the IWM, which has benefited in a huge way from the rotation. It also looks fantastic. Or you can even look at the RSP versus the SPYs. The RSP has barely pulled back at all. The RSP actually just recently broke out here in July for the first time. Look at this RSP doing nothing since it peaked at the end of March, the beginning of April. Whereas the S&P itself more or less just continued to move higher, and that was why. It was because of Apple, it was because of Nvidia. So the pullback in the market in the S&P and the Nasdaq was really just a rotation trade. It was some money coming out of those high flyers and finally going into everything else. It in some ways was a risk-off trade where the most shorted stocks got bought back up, those shorts got covered, and the most owned stocks got sold back down a little bit. And it was something that we were looking for here as a team, and we were able to take great advantage of, I think, overall. So the last 2.5 weeks at this point have overall been fantastic price action. 1 or 2 days of that last couple of weeks have been a little bit more boring, and I think that included today. But today was, again, it's a little bit more of the market having to build the setup. So, the way that markets work, and this I think is one of the things that's tricky about trading, is on the one hand, the key to successful trading is to be consistent in your approach to the market, right? So if let me even take a quick half step back. I say it all the time. The goal of a trader is what? The goal of a trader is to be consistently profitable. Well, the only way that you can be consistently profitable as a trader is if you are consistent in your approach to the markets. The only way that you can be consistent in your approach to markets is to have rules that govern your trading, that enable that consistency. And then finally, you need to have the discipline, and this is the hardest part for most people, you need to have the discipline to be able to follow those trading rules consistently over time, not to make the mistakes that I know a few people were talking about into the close. Judy was mentioning she made a couple mistakes today. I know I made a couple small mistakes today. One didn't hurt me at all. It actually benefited me, but one definitely hurt me a little bit. So one of the things, to go back to what I was just saying, one of the things that's a little bit tricky about trading is, on the one hand, you want to be very consistent. So if you think about being consistent with your trading, in some ways you might think that means that you should trade every day as if it's the same. Like if your trading volume on an average day is 50,000 shares, then if you're consistent, you should basically be trading 50,000 shares every day until you decide to size up, and then that number should incrementally increase. But that's not actually correct. Part of the rules-based approach that creates the consistency, part of the rules that you need to have actually are rules that govern how aggressive that you should be as a trader. Because not every trading day is created equal. Some days there is going to be just so much trading opportunity that you can't even be involved in all of it. We've had a good number of those days over the course of the last couple of weeks. It's why the environment's been so good, I think, from a trading perspective. There's just been a lot of days that you've been able to be really aggressive with your trading and make a lot of money. And then a lot of other days, this is probably more often than not, unfortunately, are days where you need to sit on your hands a little bit more. You need to be a little bit more passive with your trading because the market's not providing you the same degree of opportunity. And then again, part of being consistent as a trader actually doesn't mean to trade every day in the exact same way. Part of being consistent as a trader is to have rules that are helping you to determine when you should be more aggressive and less aggressive with your trading, with your game planning, with your maybe a little bit looser on your risk to give yourself more room because there's more opportunity, things like that. And today was just one of those days where the market needs to further set up. There has been a lot of opportunity in the market. I don't want to look at the SPYs because it's not really where you find it. You find that opportunity in the Qs, you find that opportunity in the IWM. You know, it really started with this rotation trade that kicked off in a massive way on the CPI day on July 11th. 4 huge upside days and a morning in a row. We were looking for this move, by the way, as a team. So a lot of us, I think, were able to really, really benefit from this. And even as we were looking for it, even as we were benefiting from the rotation of the IWM, for me, starting on the 16th and into the 17th, I was actually starting to short the index itself. And this is why we love when there's so much price action, there's just so much opportunity. Because of extension rules, which is another thing I can talk about because it's a big part of my trading. The IWM just got too far ahead of itself. I've got longs that are correlated to the IWM, so it's both a trade and a hedge at the same time to be able to short the IWM itself, just for a pullback to that equilibrium zone. So I was pretty much entirely out of that IWM short by 218, made some money in it, and then at that point we started to look to see where and when the pivot low could actually come in to go back on the long side of the market, which then came in. There was a great opportunity here on the morning of the 22nd. That was last week, right? I remember it very vividly. That was last Monday? Yeah, that was last Monday. You know, Friday we were seeing that Friday, we were seeing if we could, that maybe could be the pivot. But on Monday of last week, we sold off in the beginning of the day. I'm just going off memory. We sold off in the beginning of the day. We got very extended on the 5 minute to the downside for the IWM. We broke the previous day's low, came back above. It's like a RDR or Oldensmith overthrow, whatever you want to call it, 80-20 trade. But that's a trade to create the pivot low on the day 4 down. And it was a great opportunity to reestablish IWM long-related trades as the market moves sideways here and builds out this bull flag, and then we want to see if we can get continuation. On Friday of last week, we're looking at 224, 225, saying, wow, if the market wants to be super, super strong for the IWM, it could go, but you're still a little bit extended. And then even coming into today, the market was still a little bit extended. That was the point that I was trying to get across in the morning meeting today, is that the IWM trying to break out through 225 with the 80 EMA at like 220 and change, and the 21 EMA all the way down below 215. There's still a lot of extension there where it's going to be difficult for this IWM to go unless there's a catalyst or unless there's some serious chasing that's actually ongoing. So I'm still bullish on the IWM big picture, but from a positioning perspective, the breakout still seemed a little bit too early to me in today's morning meeting. So the IWM big picture looks fantastic. Do you want to short something that looks as fantastic as this? Probably not. But for reasons that we just described, really extension-based rules, which I'm going to avoid for the moment talking about the extension-based rules. I'm sure we've been talking about it throughout the week. I can even get into it today if we want to. But those extension-based rules were actually saying, hey, it might not be ready yet. Now, the opposite picture is with the Qs, where there's also been a tremendous amount of trading opportunity. We were looking for this rotation trade to come into play, looking for the IWM to pick up steam. I personally was looking for that trade to continue into earnings season for the reasons, like the thesis reasons that I had been describing that we then actually saw take place with Google, which is just my concerns on the degree of the move on those Mag 7 stocks into the reports, combined with the potential capex on AI not yet showing future revenue in a reasonable period of time for the amount of money that they're spending. So that thesis was confirmed by the price action. It was correct. But even while big picture wanting to be short the Qs, there were times when we actually came on the other side and we were looking long. So I remember shorting the Qs here into the gap up on July 18th. Then it got way too extended to the downside. This was a Friday, I remember. And then off that Friday, the next 2 days, we got our bounce into the equilibrium zone. I remember saying, if we can bounce into the mid 480s, it's when I want to be re-shorting the Qs. So I think I started shorting the Qs around 482. That high was 484, spot 43, pretty much perfect. And then we broke down again and then continued. But into this down move, once again, we got extremely, extremely extended. We were having a couple of days last week where the Qs were trading down on the daily chart, like $17 away from the ADMA on the daily. That's some of the most extreme downside extension we've seen in the Qs hit last week since the 2022 bear market. So with that coming into play, starting really on Wednesday in a small way, but the concern on Wednesday was that it was only a day one, and in a bigger way on Thursday into that early down move on Thursday. I remember getting like stupid heavy into the TQQQ, into this down move here on the Qs, and then we caught this move long, stupid heavy to the long side, while actually being bearish on the Qs, yet going long because of extension rules. But that's more of a trade that I want to borrow than actually keep. Fully liquidated that position into the up move, actually reestablished it a little bit into the down move. I'm not going to get into the details on that, but then was fully out of it on Friday. And then by Friday into the close, I'm saying, all right, I'm not looking to keep these Qs long anymore. I am still bigger picture bearish on this, but the reason for the longs was because of the downside extension. And now at this point, I want this market to reset up to potentially enable me to reshort. In the same way that I want the IWM to potentially reset up for me to be able to buy. I actually don't need that as much as the Q reset up, because it's got so much exposure to the IWM still, and we nailed that trade back here on the 22nd, which is still intact. But for the Qs, to look to reshort, this just seems a little bit too early here now into this bounce. I know we bounced back from 455-ish in the Qs to a high of 468 almost in the Qs today, so we got like a $13 bounce back, but that's off of $17+ of downside extension on Wednesday and Thursday of last week. So the ADMA, which is what I consider to be the lower band of equilibrium, the 21 EMA is the upper band of equilibrium. So that zone, that equilibrium, technical equilibrium zone, is like the space between those moving averages. So 470 to 477 is that space. So if we're really weak, you maybe don't even see a test of the ADMA, but most likely you see a test of the ADMA, and then if we're really weak, we get a pivot high there, and then we continue. But for myself, I'm looking to, now you fast forward to this morning's trading session in our morning meeting, where I know we had a lot of guests, and the guests haven't been in the room the last few weeks as we've been breaking down this progression in this dispersion reversion trade over the course of the last couple of weeks. So it's hard to get all of the information across all at once, but basically the idea is, yes, I'm interested in being long the IWM. I'd love to see this IWM break out, but the upside extension here says it's still a little bit too early. It probably needs more time. And the Qs, I'm definitely interested in reshorting, and I'm out of the long at this point, the extreme downside extension long, but I'm not quite ready yet to reestablish the short. I need a little bit of a further bounce back and to see what the market looks like into that. So what does that again mean for today's trading session? It means that the market's just not ready yet. You look at the IWM and it's like, yeah, we could break out and we could go here, but it's a difficult buy because of the degree of upside extension, but it's not so extended that I want to short it. So I would say that IWM was kind of in what I would call like no man's land. The short here is very difficult. The chart pattern looks fantastic, but the buy here at this point I think is too early still. You either want to still have stock from when we communicated the buy on July 22nd, or you want to be kind of waiting a little bit more to satisfy some of this upside extension. The Qs are the same but the opposite. The Qs are saying, it might be a little bit too early to put the short on because we could easily bounce back into these low 470s, but it's definitely too late to buy. You missed that buy. We just had $17 of downside extension. We had short time frame capitulation to the downside on Thursday morning that was very, very buyable. It was an incredibly awesome trade. So it's the same deal. Just kind of no man's land with both of these indexes. Now, for my approach to markets, and I think that this is really important, is that the index kind of dictates everything. So I'm a stock trader. I trade many different companies, day trade, swing trade, longer term, shorter term. I'll be involved in many different companies, but I don't think that you can be an equity trader and be a trader who is blind to what the indexes are doing. Because one of our layers of probability in trading, and this is the way that I view markets, risk reward and probability of success. Risk reward is simple, it's simple math for the most part. I'm looking at risk 1 to make 3 or 5 or 10 or whatever. The probability aspect of trading is much, much more difficult and nuanced. The way that I try to simplify probability as best as I can is through what I call layers of probability. Layers of probability are all the confirming factors or lack thereof that will influence any trade that you get involved in. And I think that there's like 7 layers of probability that are fairly ubiquitous. You can find them in almost any trade. You can analyze them for almost any trade. And then there's also a whole bunch of like one-off layers of probability that you want to be aware of as a trader as well. But one of the most important layers of probability is the index itself. Very simply put, if I'm looking to buy a stock and the S&P looks like it's going higher, I'm going to have a higher probability of success buying that stock than if the S&P looked like it was going to go lower. So that's why every meeting that I do, every morning meeting, every afternoon meeting, always starts at the index level. We start with a view of the SPYs, the Qs, and the IWM. We go from big picture down to small picture because, again, layers of probability. If you are on the side of the big picture, then your small picture trades will have a higher probability of success. Even if you are a pure day trader, you cannot trade with a blind eye towards the daily charts of the S&P and the NASDAQ and the Russell. Even if you are just a pure stock day trader, you need to know what those daily charts are looking like, and then you need to break it down further from there. So when I do these meetings, I do the morning meeting, I do the afternoon meeting, it always starts with the big picture look of the S&P and the NASDAQ. What can we expect based on how the big picture has evolved? Then we break it down to the small time frame. What does the gap mean? How do we want to position ourselves off the open? Is today a day that we want to be aggressive? Is today a day that we want to be patient? Is today where we overall want to be aggressive, but maybe we need to be a little bit patient off the open because of what the gap is telling us? Or is today a day where the gap is actually creating the setup where we need to be aggressive the second that bell hits and actually go after it? That's the breakdown, that's the process. And now when I have an understanding of expectations of what the market should do, I can then and only then actually really begin to look at all the other individual stocks that are out there that I need to be paying attention to. So what did the market tell us in the morning meeting today? First and foremost, the market said, take it easy. Take it easy. The SPYs bounce back a little bit. There's no extension, but the SPYs are very boring. There's an inside day yesterday. These could snap back higher. These could snap back lower. It almost feels like a coin toss to me. The Qs are more bearish, but they need more time. We just discussed that. The IWM is bullish, but also needs more time. So overall, the index level is saying, hey, take it easy. So when the index level is taking it easy, it means take it easy, saying take it easy when it's saying, you know, the indexes are not giving you a strong probability of continuation in either direction. What does that then mean for the individual stocks that I'm looking at? Well, if the indexes are probably not giving me direction, the individual stocks are probably not giving me direction. Unless it had earnings or was in play because it had news, that will lower its correlation to the market. That'll mean that the market itself will have a smaller effect on the stock. So whenever I have a day like today where the index is giving me a mixed message and says, hey, sit on your hands, I do try very hard to look for some earnings names opportunities or upgrades or downgrades or stocks that'll be in play that have a lesser correlation to the market because of the in-play nature of the new news. But on a Monday morning, even in earnings season, on a Monday morning, you're usually left fairly dry on that front. Not many companies report on Friday afternoons or Monday mornings. Very, very few do. And even, you know, when I am reviewing companies that report earnings or I am reviewing upgrades or downgrades or news-based names, I would say that I have to look at, and I've never actually narrowed down a number, but I would say that I have to look at 15 or 20 stocks that got an earnings report or an upgrade and downgrade to find one that is a potential trade. And then of 10 that I find a potential trade on, I might only even trade one of those. Because it's funny, on the one hand, I trade a lot. I trade a lot of volume. I trade a lot of trading executions. But on the other hand, I'm actually very, very selective on new trades and new executions that I actually get myself involved in. And I think that's actually overall a good thing. You know, after doing a ton of research, like I said, I might go through 15 or 20 in-play stocks to find one idea, and then if I can find 10 ideas, I might only trade one or two of them. So that's kind of the whole breakdown and whole progression to some degree on how we set the day up. So recapping today's session, again, we came into a day where the index level wasn't providing us a whole lot. The in-play names, I was trying desperately to find some decent ideas just because I knew how many guests I was going to be having and everything this week, which maybe actually leads to some degree of bad psychology because I feel like I need to prove myself when I don't need to prove myself to anybody, but I'm trying to find some ideas so you guys think that we're having these great actionable ideas every day. And we are, but sometimes the best actionable idea that you can have is to actually say to yourself, you know what, there's no advantage here and I should be sitting on my hands and preserving my cash, preserving my firepower for when the opportunities are actually really out there. So overall, it was not a wonderful trading session. There were some small, trading opportunities, which I'm happy to go into on the index level. There was a good trade here into the downside extension on the IWM at like 1030, 1035 for this bounce back trade. It was actually one of my small mistakes on the day. Was I liquidated like 90+% of my position into this move. It should have been 100% of my position into this move. I actually continued to trade the IWM for the rest of the day and ended up doing well with it. There were some okay cute shorts in the Qs today on a couple of occasions, and longs actually. Bought the Qs here for this little bounce back. Then I grabbed lunch instead of taking this trade, which was probably a mistake. I looked at this trade, liked it, but decided to get lunch instead. Liquidated that position really quickly into this up move, didn't take the second trade, and then was shorting the Qs into this small time frame upside extension for a cute little trade. Did that. So there's a couple good trades there. I tried to be, I've seen your question of the corner of my eye, Sebastian, in trying to look for in-play stocks. Bitcoin was gapping up a little bit. So, we were looking at Mara and Riot and Coin to see if they could potentially be in play. If anyone knows me well enough, they know I actually can't stand crypto. I'm super biased against it. So it was probably a mistake on my part to be involved in it because it's one of those things where it's like if I trade them and I make money, it's like whatever. Okay, fine, I made some money because there was a trade. But when I trade and lose money, and especially the long side, I have bad psychology because I'm super anti-crypto relatively to begin with. And then why did I let myself lose money to the long side on crypto-related stocks when crypto is trash and worthless? I can get into that also if you want, but we'll continue one at a time here. Obviously crypto was in play today over the event that occurred over the weekend with, Trump wanting to do the, cryptocurrency reserve announcement that he, was talking about in Tennessee or whatever, which wasn't even new news. He had already said that, which is important, by the way. There's something different when it's new news versus old news. We had seen that already. He's just repeating something that was new. So it meant that the crypto further bounce this morning, if there was any bounce that was coming from that, was based off of hype off of old news. Hype off of old news is usually faded. So that was kind of mistake number one, even the idea process. But like I said, one of my mistakes, if I had any today, from a bigger picture, was probably trying to force things a little bit more today, just because, like I said, I knew that there were going to be some guests. So, looking for the Mara break versus the $22 area, that was pretty much the game plan, was to be long versus like $22 to $22.14. That trade just totally failed. Looking for Riot for continuation above $11.75. It triggered through that off the open. That trade totally failed. Coin got a mention. We said you could look to be long coin versus Friday's high as well, but really the better trade is probably if it confirms itself by getting above 260. But if you tried it versus Friday's high, that failed also. All those trades basically failed entirely across the board as Bitcoin just came back down and kind of stayed within its range. And these stocks that traded a higher beta to Bitcoin were even worse than the Bitcoin move itself. So that was pretty much it. To answer your question there, Sebastian, it was, on the daily chart, be long for Mara versus that 22 to 22.15 area, which was basically Friday's high. Off the open, there was a trade there. You could take it as a momentum trade just versus an opening low. If you did that, you stop yourself out pretty quickly. It's usually not how I trade. Usually I want to trade more versus like this pivot. Once this pivot broke at 10 a.m., the trade was 100% shot. For myself, I took a feeler pre-market, a small feeler. I sold a little bit of that small feeler into the up move. Didn't really rebuy it. And then I took a big trade as this pivot was establishing itself, bigger size, about 22.08. Once this pivot established itself, basically versus that low. But I didn't need to stop myself out of any of that stock because I sold that entire add-on into this up move. And then the mistake I made was not stopping myself out of my core position, really. I had a very small core position, and I was like, I'm going to keep this core position on and try to manage it around that. So I kept that core position on a little bit. And then as this thing looked like it was downside extending, and I just don't know the name well enough, I started to reinitiate the trade a little bit and start trading it heavier again, and never caught any move on it as this thing just kind of continued to bleed out. I bled out with it, and I dumped a lot of stock basically for a loss into the close. So Mara, my worst name on the day today by far, and I don't care about losing money. Honestly, I don't care about losing money or making money. I care about my process. And the problem is I made two process mistakes today. One process mistake was not fully liquidating the core position on the break of this low. When this low broke, you knew the idea was wrong. You knew the idea was wrong. Well, I wanted to stay with the core position and trade around the core position. I just bled out on that core position all day. And then when I did try to trade around it off that extension, I got zero bounce out of it whatsoever. So this was probably my biggest mistake that I've honestly made from a trading perspective in a while, was not fully admitting to myself that the trade was wrong and just getting out of it and getting out of the way. I see it's actually having a small bounce here right now after hours. But I will now that I've made the mistake, I'm going to stick with the mistake because that's kind of how I do. And I kept a little bit of that overnight, but I did dump a lot into the close. That was one mistake that I made today. And the only other mistake I really made today, and it was a very small mistake, and I actually ended up making more money off of it than otherwise, was not fully liquidating my TNA position into that bounce. I literally liquidated everything except for like one little piece, and I should have put a risk reward stop out here because my offer, the high was 70, my offer was 74 cents to liquidate, and I just didn't. And I kind of kept that trade really throughout the whole day, liquidated it into the close, into this up move here into the close. And again, I ended up making more money with it than I would have otherwise. It's actually my third best name of the day. But I didn't really trade that well. And therefore, to be more upset with myself, I don't have a really good example of this type of trade execution and type of trade that I've been going over a lot recently with the team on some of the smaller time frame counter trend stuff that I've been doing. If you guys have been following along on my afternoon meetings, then you already know about it. I did a better job with it on some of these QQQ trades that I took today, where I was buying that downside extension here but being fully out by the ADMA, or shorting the upside extension here and then being fully out by the ADMA for a profit in both circumstances, where I can liquidate the position sometimes at a worse price than I started buying it or started shorting it, and still make money because of the process of the trade while it satisfies that extension. That's really what you're looking for. I was doing it with TNA instead of IWM. I like the TNA because it's a little bit cheaper priced, so I can work the increments a little bit better than I can work a more expensive IWM. So I was doing it in the IWM to the short side when the IWM first got up to 225 like 2 weeks ago now, where basically I can work these increments kind of back and forth to create cash flow for myself while the inevitable, because it's like literally a law of math, correction to that ADMA occurs over time or over price. And then whether I make money is a function of how the correction actually occurs, where if the market goes sideways in that area, I'll make money. If the market goes up in that area, I'll make money. If the market goes down in that area, I can even still make money, as long as the rate of descent isn't worse than the rate of the volatility in that move. So that's been a trade that's been working phenomenally well overall, outside of the small mistake I made in the IWM with it today, and even with that small mistake, still got paid pretty well with it. And both those TQQQ trades were positive trades as well. This has been a big thing of what I've been doing. I feel like today's example of that trade is not a great example to talk about the specifics of the execution. I'm sure we will have more during the week where I can get into a little bit more of the specifics on kind of like how these buy and sell dots actually work in this area. TQQQ being a little bit cleaner than the TNA today. I think that covers all that I've got on my end for today. I am happy to answer any questions that anybody has. I see that there was a lot of questions that were piling in while I was talking. That's great. I'm going to try to answer all of them, and I'll try to do them in the order in which they were received. So I'm going to scroll up here. We started the meeting at about 10 after 4. So the first question I think I'm seeing is Happy said GE, but I don't know what you want me to do with that. Happy, if you want to provide more information, do you want me to review GE as a chart? Is there a trade that you took in it that you want me to review? Are you asking my opinion on the company? If you want to provide a little bit more information besides just telling me the symbol, I'm happy to review GE with you in any way. So then what I'm seeing here is from Robert. Back to my question from last week. When you are trading those cash flow trades, you said you are not interested about your average price. When you are taking your trim above your average price, aren't you technically trimming for a small loss, assuming you're in shorts? All right. Robert coming right out of the gate with a not easy question to go over. I'm going to need a spreadsheet, I feel like, really to do it. Let me pull up a clean spreadsheet here and try to go over it. So this is something that I actually think is important, but it's hard to get across. For some of you guys, you might find it boring, but you know, I do my best to answer every question that everybody has. So it could be a little bit boring, but I think it's also important to review. And again, we've got a lot of guests here who don't really understand the strategy because they haven't participated with the team long enough to understand kind of what I'm doing with some of these trades. But I'll just answer your question, Robert, as best as I can. So people get messed up a little bit. I think the concept of average price messes people up. And I'll try to create an example here on an Excel spreadsheet. All right. Let's say that you create a game plan for yourself where you're going to, because we need to come up with an average price, buy 100 shares of stock every 10 cents on the way down, starting at, let's say, $10. So you're putting a bid at $10, then you're going to put a bid at $9.90, then you're going to put a bid at $9.80, then you're going to put a bid at $9.70, then you're going to put a bid at $9.60, then you're going to put a bid at $9.50, then you're going to put a bid at $9.40, etc., all the way down. All right, you're buying 100 shares on the bid every time. And now let's say the other half of that game plan, so these are your bids. Now the other half of your game plan dictates that every time you get filled on one of these bids, that you're going to offer it out 10 cents above. So you're going to sell at $10.10. You're going to sell, if you get filled at $9.90, you're going to offer that at 10. If you get filled at $9.80, you're going to offer it at $9.90. If you get filled at $9.70, you're going to offer that at $9.80. If you get filled at $9.60, you're going to offer it at $9.70. $9.50, $9.60, $9.40, $9.50. Okay. So now let's say for our trade example, the stock opens up. The stock opens up just above $10, and let's say it goes straight down to a low. So our open, let's say, is $10.02, and then it goes straight down to a low of $9 and let's make it $9.48. Okay, so you get filled on your $10 bid, your $9.90, your $9.80, your $9.70, your $9.50. I did not mean to change all those to 10. So you get filled. You get filled all the way down to there. Okay. all the way through. All right. So now what's your average price? What's your average price? You just bought 100 chairs, every 10 cents from $10 down to $9.50. So your average price on that is going to be $9.75, right? So average price is $9.75. All right. Now this gets more into the heart of your question. So if you then go straight down to $9.48 and puts in a low at $9.48 and starts to bounce. You bought $9.50 for 100 shares. You sell it at $9.65. What's your P&L on that execution? Well, there's two ways I think you can view it. Based on your average price, when you sell here, you just took a loss of $15, right? You just took a loss of $15. I'll make this P&L average, and then I'm gonna make this a different column, P&L incremental. All right, so that's based off your average price. But now forget for a second about your average price. Forget for a second about all the other buys you did. Think for a second only about one transaction. You just bought 100 shares at $9.50 and you sold 100 shares at $9.60. What's your P&L? Your P&L is $10. And these are gross numbers. Forget about net numbers for a second. Let's just make this easy. So did I just lose $15 or did I just make $10? In my brain, it's no different. There's no difference. Actually, in my brain, the way I prefer to view it is that I just made $10. But now let's continue our example. And this is where I think you'll have an understanding. All right. So now your stock goes all the way down to $9.48, and let's say it V-bottoms off that low and then goes straight up and makes a new high. So the new high, we'll say, is $10.12. So now what happens is you got filled on all these bids all the way down, and then you get filled on all these offers all the way up. Let's calculate the P&L. So first we'll calculate it off of average price. I bought $9.50, I sold $9.60. I lose $15 because my average price is $9.75. Then here I lose $5 because my price is $9.70. Here I make $5 on my sale at $9.80 because my average price is $9.75. At $9.90 I make $15. At $10 I make $25, and at $10.10 on my offer I make $35. So what is my total P&L on those transactions? I made $60. Right? Now think about it with the increments. Forget about your average price. You bought $9.50, you sold $9.60, it's $10. You bought $9.60, you sold $9.70, well that's $10. You bought $9.70, you sold $9.80, it's $10. It's $10. It's $10. It's $10. Total P&L. It's the same. It's the same $60. It doesn't matter, and I think average price messes people up because they think they're losing $15 here, when you could think that you just made $10 here. It's same off of that piece. Now the reason why I prefer to look at it this way is because in this circumstance I just did a V bottom and we went straight up to new highs. We know that doesn't happen a lot. A lot of times maybe the stock sells off and then it goes sideways. Maybe it goes sideways the whole rest of the day and keeps in a range between $9.48 and $9.62, right? So you're, selling for that $15 and $5 average price loss. But if you're doing that over and over and over and over again, if it stays in that range and I can buy $9.50 and sell $9.60 and put $10 in my pocket, buy $9.50 and sell $9.60 and put $10 in my pocket, and buy $9.60 and sell $9.70 and put $10 in my pocket, and just do that over and over and over and over again, then the average price, if you want to call it, works its way down. I keep putting that $10 in my pocket, and if I ever get the move higher, then I make all that extra money. So at the end of the day, the point that I'm trying to get across, because this is the point directly to your question, is that average price, I think, can be super misleading on your trading, when you actually understand the accounting behind it. Did my average down here just cost me $15, or did my average down here just make me $10? The way that I game plan and strategize that cash flow strategy that you're talking about is that everything is incremental P&L. And then what happens is you can just work that range over and over and over again, and then next thing you know, you could be 50 cents out of the money. The stock didn't go up at all, but you're break even or up money on it. And then if it moves higher, you're going to make even more. Or if it so this goes back to what I was saying a little bit about the TNA and TQQQ trades with what I was specifically talking about here on what I meant when I said if the stock goes up, I'm going to make money. If the stock goes sideways, I'm going to make money, right? Because I'm going to be lowering my target as the ADMA moves down for those counter trend trades. I'm going to be lowering my target. I will even be able to make money if I buy and the stock goes down, if the rate of volatility, the rate in which I can buy and sell, is greater than the speed in which it actually goes down, right? So if this thing continued to go down, that ADMA will continue to go lower. My target will continue to go lower. It's almost like with the TNA that I ended up in all day. My first buy was $9 was $47.34 or so right here. There's a little bit of a core position, so it was, multiple increments. My last sale was, and I had even been selling my core even below that, was like, I'm selling my core then at a 20-cent loss basically, and it's a 4-figure win for me. It's a small win for me at the end of the day, 4-figure win for me, just because of the rate of volatility throughout the day being greater than the rate of overall descent in this TNA throughout that day. And again, not the best example, because really I should have liquidated the position fully into this initial up move, and I just decided to continue to trade and kind of continue to work it. But I think that fully then answers your question there, Robert. So appreciate the question, bud. From Vincent, thoughts on MDB? And I'm not scrolling down yet. I know people might have follow-up questions or whatever, but I'm all the way up at 4:15 to try to get through everybody's questions. Thoughts on MDB? I don't know the company super well. It gets brought up a decent amount. Looks like there was a terrible earnings report or something back here in June that smoked the stock. It's building out a wedge ever since then. I don't like to trade these $200, $300 names too often. The spreads can be really wide, so I don't have a lot of thoughts. But above 260, you have a breakout of the wedge into the gap. Below 240, you have a breakdown on the wedge for continuation. So there's a potential either way trade, I think, on whichever way it breaks. Doesn't report for another month, yeah. Cool, appreciate it. From Deepak, as you go through this, can you walk through your day trade short on Tesla and the TNL trade today? Sure. So the TNA trade I kind of just went over, I think, in pretty good detail. The Tesla trade I never took because I didn't get my fill, and once I didn't get my fill on my initial counter trend move, I wasn't interested. And then I missed the real signal. So initially into this first up move here, this high at 10:05 is 232.45. I was offered 232.49 to enter a short. So I did not get filled on my first short trade in Tesla by 4 cents. It price corrected without me. Once a counter trend extension trade price corrects without me, I don't want that stock at that price anymore. If it gets back to that price and a new high, it's probably going higher. So I missed my first entry on my trade. I was being conservative, but the stock was strong. I was scared by the consistency of the volume. We actually just went over this with the team last week on an Amazon trade, when Amazon had relative strength but really good consistent volume, and guys, including myself, at a certain point were trying to short it, but the consistency of the volume was still there. So it was a layer of probability against the counter trend trade, and a layer of probability for continued momentum was the volume confirmation. Same deal here with this Tesla, being very patient. So we have time frame rules that we pay attention to, extension versus certain time frames. So come after 10 a.m., it becomes very difficult as a general rule for a stock to maintain extension on a 5-minute chart. Post 10:15 to 10:30, it becomes very difficult for a stock to maintain extension on a 15-minute chart. So, and the way that I measure extension, we've gone over this briefly, is the space between where a stock is trading versus where its equilibrium is. Technical equilibrium is represented by the space between the 8 and 21 EMA. So when I was trying to short Tesla, when I had my offer out at 10:05, I was offered out at 232 spot 49. The 8 EMA at that point was at 229.20. So the stock at that point is like $3 on a $200 name, extended from its upper band of equilibrium. And the 21 EMA, which is also representative of about the 8 EMA on the 15-minute chart, the upper band of equilibrium on the 15-minute chart, the 21 EMA was all the way down at 225.42. So there's enough room here at that point for that time of day. The time of day is really important to me, to be able to expect a 5-minute correction at a minimum. This was a very shallow correction. It didn't even fully correct to the 8 EMA. But don't be surprised when you have that consistency of volume to not even get that correction all the way down to the 8 EMA on the 5-minute chart. That's what that volume like literally means. It's also why I was being patient. It's also why I was not upset to miss the initial short trade, because I knew I was being conservative with it. So then the real trade, and I missed it just because I wasn't watching it. I loved this push through failure here at 10:45. Now I'm looking at a 5-minute chart here immediately with you to answer your question. That's probably a mistake, because you can't look at 5-minute charts without looking at the daily chart first. So the daily chart, I'm already interested in being short Tesla into the 235 zone. That was the spot that I was saying after the earnings report, but it was so weak it never gave you the chance. It was the spot I was saying in the second half of last week. Ideally 235 for a bounce would be an area that I would like to short if I can get that sort of bounce rate to actually come in. Today I kind of lowered that band a little bit from 235 into like the 230 to 235 zone. And that's just because as time goes by, it satisfies the downside extension. So maybe that pivot actually then is a shallower pivot, closer to 230 instead of 235, because enough time went by. Again, time frames, different time frames, all coming into play all at once. So the daily chart already has me wanting to short Tesla into that 235 zone. So the daily chart's already lining up for me. But I need then to have the small time frame trade, right? That's what I was saying to you guys briefly in the morning meeting and in the introduction this morning. I publish a list at 9 a.m. That's a very general idea list. That general idea list needs to be confirmed by the small time frame to actually execute it, that the trade is actually there. Like I was just saying before, I might look at 15 or 20 stocks and come up with one idea that I like from it, and then of those ideas I can come up with, let's say I come up with 10 full ideas, I might only end up trading one of them, because everything has to come together in order for me to be willing to get involved in the trade, for me to be willing to put risk of my money on the line. Everything really needs to come together. So I'm interested in that 235 zone, and now it's 10:45, and you get this upside shooting star candle at new highs, and extension on the 5-minute chart still at 10:45, let alone the extension of the 15-minute chart. Again, I was just talking about time frame rules. Post 10 a.m., it becomes very difficult to maintain extension on a 5-minute chart. Well, not only is it post 10 a.m., it's 10:45 a.m., and this thing is still extending on a 5-minute chart. At highs on the 10:45 a.m. candle, the stock is trading at 234.25, and the 8 EMA is at 232.30. I still have $2 upside extension on a 5-minute chart at 10:45. It's very late in the day to be able to maintain that type of extension, let alone on the 15-minute chart. The 15-minute chart, which again, it becomes difficult, not impossible, difficult for stocks to maintain extension on a 15-minute chart post the 10:15, 10:30 period. Now it's 10:45, and I've got Tesla trading at 234.25 with the 80 MA at 229. I've got over $5 of extension on the 15-minute chart. There's a lot of reward profile. So I've got beautiful small time frame extension into a daily chart that I care about with a 5-minute signal of a shooting star candle. That's the trade. And it worked beautifully. Full, beautiful 15-minute correction into the space between the 8 and 21 EMA on the 15 before eventually giving a pivot and working its way back towards highs. That's the trade. I want to be short this thing from a price of no worse than 233. I don't want to be shorting this thing by the time it's in this equilibrium zone. This is the area where it now has a much higher probability of actually pivoting back up if it's going to be very strong and that volume confirmation is going to continue to be there. So that's the Tesla trade that I missed. It was a great trade, and unfortunately I missed it, and we already went over the TNA. All right, next here is from Christopher. Hey, Dio is firing off a bunch of trade ideas midday at you, but wanted to follow up on the DraftKings trade. Can you go over what you saw on the daily chart that makes you think bullish on the stock? I was leaning short. All right, let's take a look at the DraftKings daily. So first of all, I have a little bit of a bias, a bullish bias towards the stock, which to me that's important. That comes from more of qualitative fundamentals than anything. I like the idea of being long America's vice. Americans are loving to gamble. I don't gamble. I don't gamble on sports, but I've got buddies who are all over their, sports betting apps and stuff like that. I'm not that person, but people, when the football comes around, everybody's addicted. By the way, I don't know if anybody watched the Olympics over the weekend, not to get off topic. I've never watched rugby before, and I was watching what they call the rugby sevens and kind of learning the rules. And first it was South Africa versus Australia, and then it was France versus Fiji. Man, that was riveting. It was so exciting, and it was only 15 minutes long. Like, why aren't all sports like that? That was, like, the fact that it was only 15 minutes long, I think, made it extra exciting. Like, I unpopular opinion, I'm not a huge sports guy outside of fighting related sports because I used to fight professionally, and even then I only really watched it more to study the game than as a fan. So I'm not really a fan of sports at all. But like, I can't do the American football thing where people watch like 4-hour long games and the last 3 minutes goes for 45 minutes, and then they watch like 6 games a week because they're in a fantasy league. It blows my mind. Super unpopular opinion. Everyone's welcome to hate on me on that. But the rugby stuff was awesome. I was like, you're telling me I can watch this rugby game and it's this intense and it only lasts for 15 minutes? Like sign me up. And that seemed like a real awesome sport too. Anyway, before I scroll down in the VTF to see everyone hating on my take on football, let's analyze DraftKings. Because everyone I know I'm in the minority, everyone's in the majority, they love to gamble. There's a huge base here at this $36 area, and I'm biased towards the stock. So stock is pulled back from 50 into this 36, it's built a base here. It's still like wedging down off that, but I'm looking for that wedge to break to the upside. I personally would rather be long off this area than be short it. If I'm wrong though, there is a short here, but I would want confirmation that the support itself is actually breaking in order to have the short. And then your next support level is not really down until like 32 bucks. Maybe a little bit at 34 and change, but then really at 32. So for me, while it's holding above 36 support, I would rather be long this after this pullback, especially because I'm still broadly bullish. And again, time frames, index levels, and to individual stocks, I'm still bullish on the rotation trade. I'm still looking for more money to come into small caps, mid caps, growth. This is a growth stock. So I'm bullish on the big picture idea. I'm bullish on the chart as long as it holds above 36. I'm bullish on the thesis of the company based on what we also discussed. Holy crap, is BYON up here? I need a minute. I'm sorry. I have a position on this. What did I miss on this? Why is it up here? And did it already pull back off highs? I need to see this chart on the small time frame ASAP. And I need to... Wow, I just missed this move. What's the high? Almost 1584? Fuck. Oops, I'm not supposed to curse in the VTF. I need to figure this out ASAP here. Right. Sorry, just give me a minute. And if anybody has the news on this, please tell me. I'm pretty sure that they were not expected to report for a while. I hate that I'm selling into the late part of this down move here, but I have a game plan and I have to follow the game plan. So is that 86? 86 and 14. What did I just sell there? But I already sold those, so my 96 would be 14. So 96 would be 14. Sorry, I just really need a second here because I love you guys, but money is very important. So what did I just sell? I sold 11, sold 12. I need to sell 2 more. I need to sell 3 more there. Let's see if I get that fill. Alright, just give me one more quick second. I almost have this worked out. I'm like, why is my P&L up so much? I assumed that my P&L was up so much because of like one of those misprints that goes off sometimes. One more second. All right. Yeah, so I think we basically went through the DraftKings thought process there. That's what I'm thinking there. I don't want to be short this thing while it's about 36. Average shares that I trade on the IWM. I don't trade the IWM every day. And average shares is the wrong question. If you want to ask for more detail, I'm happy to provide some more detail. Shares is always the last part of the equation. When you're putting on a trade as a general rule, and it can get a little bit more complex than this, but when you're putting on a trade as a general rule, the first question that you want to ask yourself is how many dollars do you want to risk? And at the same time, the other question that you're asking yourself is, what is my entry price versus my stop loss? And then you back into how many shares you're taking last. So if I'm buying $15 and my stop loss is going to be $14.90, I've got 10 cents worth of what I call space risk. And then if I want to risk $100, I buy 1,000 shares, right? If I wanted to buy $100 stock with a stop loss at 99, and I want to risk the same $100, then I only take 100 shares. So if you want to clarify the question, I can answer a little bit better. And the only other thing I would say about that is sizing is going to be particular to the person in a large way. So you know, we got different folks with different account sizes. We got folks with small accounts. We got folks with $1 million accounts on the team. So what matters more is the process, and not, you know, what any one individual takes sizing wise or risk wise on trades. We want to evaluate the process more than anything. But again, if you want to give me a follow-up question, I'm happy to answer it. From Axel, do you think that ON is a good candidate for a swing trade? I am hesitant as the stock has not been able to break the 80 level. Yes, I think it's a good candidate for a swing trade, is the short answer to my question, to your question. Especially if it's closing above the 78 zone on a good earnings report. But when it comes to that, I think it matters on what your profit cushion is at the close. So is it a good swing trade? Well, maybe. It's a good swing trade if you're long from 76.50. It's not a good swing trade if you're long from 80 and it closed at, you know, 78.50. Because you've got room to kind of play with the profit cushion. So as a general rule, I'm an advocate of swinging stocks when you are already in the money with them, so that you're in a win-win position, because you never know what's going to happen overnight. If the stock gaps down against you and stops you out, but you're already up money in it, you're just going to give back the money that you've already made and hopefully not lose anything. If you keep a position overnight that's already against you and then it gaps down, you might have a big problem. So if you're already in the money on the position, you've got room. If it gaps down tomorrow, you stop yourself out. Maybe you don't lose anything. If it gaps up and breaks through 80, you're golden. If you're long from 80 and it closes $2 against you and you're keeping the position and it gaps down tomorrow, you're kind of screwed. If it gaps up, then, you know, you're lucky. So I don't want to be in a position where I'm either lucky or screwed. I want to be in a position where I'm either going to make a little bit of money or not lose money, or I'm going to make a lot of money. So that's the difference between swing trading from a win-win position versus swing trading from a lose-lose position, basically. So that's what I would recommend. FFIV reported. I didn't see the numbers. If anybody has the numbers and want to post them, happy to see it. But yeah, big move on FFIV. Mara, we went over already. What time frame do I trade during the day? Sure. So kind of went over that a little bit, but happy to go over it more. So I trade multiple time frames. I day trade, I swing trade. I'll have positions that I'll be in for minutes. I'll have positions that I'll be in for over a year. But like I was saying earlier, I think regardless of the time frame that you actually trade, whether you're a pure day trader or you're a swing trader, that the daily chart's the most important time frame. Even literally, I think even if all you do is day trade, I still think that the daily chart's the most important time frame. Everything starts from the daily chart and breaks down from there. So the daily chart tells you what you want to be involved in. The small time frame tells you how to trade it. But that's not to say that I won't take, you know, little scalp trades here and there like I was with the IWM and the Qs today into the small time frame extensions. Those trades are pretty roughly on a 5-minute chart, but I've always got the big picture of the daily chart in my head as I'm kind of game planning off of that. John wants to know why I don't like crypto. I am still unable to find a use case for it. There is zero use case for it. We are utilizing the same amount of energy that supplies the entire country of Argentina to create a cryptocurrency that's not a currency. You can't buy anything with it. It has so much volatility that it's hard to argue it's a store of value. Would be useless in an end-of-time situation, unlike gold or silver would. I used to even mine a little bit myself. You know, I've been involved in the crypto space. I mined a bit some years back. But the more I've learned about it, the more I dislike it. And then you've got all these useless altcoins and everything like that. I think that the whole thing is a scam. And it's a scam that's being now further perpetuated by big finance because they want to make their money on it too. And then I think in the long run there's some scary implications of it as well. So that's my kind of short answer. I basically there's no value. There's no use. Please correct me. I'm very open-minded, as you guys will find as you work with me. I'm very open-minded. If I wasn't open-minded, I probably still wouldn't be in the business. You know, I remember back in the day, traders were like, you know, you can only follow the charts, or you can only follow this, and, you know, fundamentals are useless, and it's by always being open-minded that I've been able to expand my career and learn more and more over time. I am very open-minded to arguments that someone might want to make on the other side of crypto, but I can't have a big picture bull thesis on something that in my brain is like literally valueless. So yeah, that's my answer. And I'm sure people are giving me follow-ups, but I'm not seeing the follow-ups because I'm still just scrolling down the VTF here. From Adam, I can't tell you how valuable it is to hear confirmation from someone with your success that mistakes and breaking your own rules still happen, but you have to learn from it and move on. It's also very poignant to hear you talk about caring more about your process than the money result. Greatly appreciate that little psychological nugget. Yeah, for sure, Adam. And you know, genuinely believe it. The The hardest part about trading, I think, is to learn to not care about your P&L. It's the hardest part. It takes the longest period of time. It took me so long, and I still care to some degree. It still influences me, you know, my emotional well-being to some degree. I just don't let myself react off of it, and even my emotional reactions to it are very muted nowadays compared to how I was in the past. But it took me years to eventually, you know, understand and realize that the process matters more than the P&L. And the mistakes that we make as traders are so often about moment-to-moment P&L that cause us to forget about process. When the business is about making money in the long run, it does not matter if you made money or lost money today, unless you make it matter. It only matters if you made money or lost money today if you lost so much money that you blow up your entire account and you can't recover from it. And I promise you that that only happened because you violated your rules to begin with, because you probably had short-term bad psychology where you didn't want to take your loss or whatever it is to begin with. I still make mistakes as a trader. The goal is perfection. It's unachievable. So I try to make those mistakes as few and far off as possible. I still make them. I made a couple of them today. Shouldn't have, but I did. Whenever I find that I make any mistakes trading, you know, I just really try to hone in that next morning and remind myself that all I need to do to make money, and I genuinely believe this, all I need to do to make money is do the right things consistently over time, and I will make money. And therefore, the P&L today doesn't matter unless I make it matter by making stupid mistakes. And I think it's actually okay to beat yourself up a little bit if you make stupid mistakes that you know are stupid mistakes. You should beat yourself up a little bit for that. But by the next day, you got to come back even keeled and just be focused on the approach, not be focused on making the money back from the mistakes or whatever. From Carol, for the Qs trade, it was quite a good long off the lows, very consistent buying, and if trailed the 5 minute, it would be great. How to identify such trends and make advantage of it? Sure. So the target that you should have, I think, on those trades, especially those counter trend type of trades, is dependent on, I think, your view of the big picture. So, you know, for me in this area, I don't really want to have any real QQQ trades on except scalps, because I think that the price action is somewhat random in these zones that we're describing to be not giving you a strong advantage to the long side or the short side, right? So the big picture's telling me, like we already discussed, I don't feel like I have a strong advantage to the long side or the short side. So therefore, in this area, I don't want to be looking for the bigger trend. I don't care, you know, if I bought the Qs at lows, which I didn't, but I looked at the trade and decided to get lunch instead. If I bought the Qs at lows, I can just about promise I would have been all out by 464. I would not have caught this entire move. And that's because it's not, that little scalpy trade is not confirmation on the big picture. The big money, I believe, you know, you can do these cute little trades and make some cash flow for yourself. It's fun. But the big money comes from capturing big moves on size. The only way that you capture big moves on size is to get the big picture right. Where is the big picture right? The big picture was right on the short into 484 that we had on July 23rd, because the big picture confirmed the small time frame. Or I already went over this one. We had a great small time frame confirmation on the morning of July 22nd to buy the IWM, and the big picture also confirmed that. So that is a trade that should be more than just a small time frame scalp on the IWM. It should be one where you're saying, hey, I'm looking to hold some of this for the real move, because the big picture is confirming that this is the right spot where it can potentially happen. So that's how I think you want to take advantage of it. From Eli, and I think you're the second person to ask this, why do I not trade futures? Sure. the question that I would ask you if this was more of a one-on-one setting is why do you trade futures and not stocks? So I can answer the question on my end. So most people who trade futures, most not but not all, trade futures because they're retail traders, and futures provide a degree of leverage that they can't get trading equities. So you just have your account, and if you are in a Reg T margin account or even a portfolio margin account with your broker, you're very limited on equities and ETFs. You're maybe, getting 4x intraday and 2x overnight on equities, and there's all types of haircuts if you're trading stocks that the clearing firm decides is risky or whatever. So you can just go trade futures, or especially, day trading futures margin, you could get all the leverage you ever want in the whole world. I don't trade futures because I'm a prop trader. I'm not a retail trader. As on the prop side of the business, especially for myself because I've been with T3 for so long, T3 will give me all the equity leverage that I could ever want. If I want 200x, I probably could get it. I don't, but I probably could get it. Even with our starting prop traders at T3, they have to fund their account in the same way that you would fund any other account. We typically start by giving them 20x for day trading and 8x for overnight positions. So at that point, the amount of leverage that you can get on the prop side of the business fully negates the benefit of trading futures. And I find futures to be a limiting product. Because guess what? On some days, somewhat like today, I wake up and I look at the S&P and the NASDAQ and I say, I don't have an advantage. Well, guess what? What do most futures traders trade? They trade the S&P, they trade the NASDAQ, maybe they trade the Dow, maybe they trade a couple commodities like gold and oil. Well, if I've got these couple things that I trade and I don't feel I have a strong advantage in the market, well, the hardest thing for a trader to do is not trade. But as an equity trader, I've got a universe of 10,000 equities that I can view. I can view all these different stocks that have earnings, they're in play. If the indexes are out of play for me, I can almost always find opportunity elsewhere. The only advantage that futures could have for me over equities is if I wanted to trade in the middle of the night. And I don't want to trade in the middle of the night. As an equity trader, I get access from 4 a.m. Eastern to 8 p.m. Eastern. That's more than enough. All this chatter about 24-hour equity markets is my horror story. It's my hell. I do not want 24-hour equity markets. I can't emphasize it enough for a number of reasons. One is because I love gaps. Gaps give me an advantage on my trading. And two is because I know myself too well, and I know that if the market is moving, I will trade the market. I often start trading at 5 a.m., 6 a.m. in the morning, Eastern time. On earnings days, when sometimes when Apple reports earnings or, the big cap tech names report earnings, I'm sometimes trading them until 6:30, 7:30, 8 p.m. at night. That's already more than enough. I like to go to bed and I like to sleep. So, and that then has my brain feeling good for the next day. So that is the answer on why I don't trade futures. If you're interested in the prop advantage, you can reach out to info@t3trading.com, info@t3trading.com, and either myself or one of the members of the business development team at T3 will reach out to you to provide more information on the prop advantage. Cool, so we went into crypto from Axel. What would represent a buy signal to go long following the sell-off this morning? What would represent a buy signal to go long following the sell-off this morning at 11:30 a.m. First 5-minute green candle? I'm assuming you're talking about this 11:35 candle. It's just the amount of extension at that time of the day versus where the market is now trading into the gap fill. So there's some general gap fill support here, and it's a heavy sell that created some extension to be able to look for a small time frame bounce trade. It's by no means an A+ trade. You could execute that via the inside and up, or you could execute that as kind of more of a build-in trade like I was talking about earlier. It's by no means an A+ trade. It's by no means like a really, really good trade, but something you could maybe be involved in for just a little bit of cash flow. From Cynthia, what process do you use to determine if a stock is worth keeping overnight. Sure. So it's a combination of the daily chart and my profit cushion, like I was talking about earlier. I want the daily chart to tell me that there's more legs. Because once you're committing to keeping a position overnight, you are committing to the daily chart, by the way. That's important to note. And then you want to, like I was talking earlier, you want to make sure that you have a profit cushion, I think, to keep the position overnight, so that you're swinging the position from a win-win situation. So now if the stock gaps down against you, unless you get really unlucky with bad news, if the stock gaps down against you, you're most likely just giving back open profit. If the stock continues in your direction, you're just going to make a lot more. That's a win-win situation. If you're holding a position overnight that's against you, it doesn't have to be a lose-lose situation, but for a lot of people it becomes that. Either the stock is going to continue to go against you and you're going to lose even more money, or you are going to get back to break even and liquidate your position. Now you're taking unlimited risk for zero reward. It's just not where you want to be. So I generally really like the idea of having a profit cushion into your swing trade so that you're approaching your swing trade from a win-win perspective. Short seller Andrew left surrenders in Los Angeles. It's wild. I think they're out to get him. I don't know what's going on with that. It's just so weird to me that they're doing this now and that they're not doing it in 2018 and 2019 when he was really doing that stuff and making money off of it. It's become so much harder for him the last 4 or 5 years. I don't think he's been making money on the short side. He even stopped announcing his shorts. It's crazy. BYO, oh, it reported? I have on my list. Oh, wow. All right. I totally made a mistake. All right. No problem. Don't worry about it. the old accidental hold a stock into an earnings report game. It's not a good move. Third mistake of the day. Second mistake of the day that worked in my favor. To the tune of 5 figures. Not good. It doesn't matter what the P&L is. You can't make mistakes. You gotta know trading 101. If you're swing trading, know when your stocks are reporting earnings and don't accidentally hold them into reports unless you're gonna get lucky. If you're gonna get lucky, then do it. It's a joke. It's a joke. Do you have an out for those cash flow trades in case they keep falling? It's a great question, Sebastian. So the out in those cases is a moving out. It's the ADMA, right? And this makes this a very complex trade for people that are new. It's not a stop loss. It is as the trade is moving against you, that ADMA is going to continue to fall. If that's the game plan, was off the ADMA, you have to have that game in the same way that you have a stop loss ahead of time. You are creating a game plan where your stop loss, and usually the way that I do it is the ADMA on the 5-minute. Inevitably, so to some degree you have unlimited risk, and it makes it much more dangerous in an individual stock than in an index, though indexes can crash also. Stocks tend to have a higher probability of crashing than an index does. So there is a degree of unlimited risk on the trade. But it's like literally a mathematical law that all stocks will eventually touch their ADMA on every time frame. So that's the trade. The stop loss is actually in my favor initially and moves against me rapidly as time goes by and I don't get the price correction. And I lower my target and lower my target and lower my target, where I will take a loss if it bounces to the ADMA and I wasn't able to get enough, of the incremental buys and sells in the meantime to make up for the amount of lost P&L versus that ADMA. That's the way that I do that as my out. So again, it's definitely a pretty sophisticated trade. It's not like a trader 101 buy the breakout, put the stop loss in at the ignition bar type of trade. Is the rate of movement up or down what you mean by gamma? No. when I'm talking about like the incremental trades, I'm really not talking about gamma. Though I see where that could come from. You know, gamma is like one of the options Greek. It's the rate of change of the rate of change. It's like the rate of change of the delta, basically. Most of the time when we're talking about gamma as a team, we're talking about the index level gamma of the S&P most of the time, and what that means to the market makers and the dealers who are the ones who are absorbing the other side of the options trades, who need to hedge themselves. So when you're in a positive gamma environment, what it means is as the market moves higher, market makers have to sell in order to stay hedged. When the market moves lower, market makers need to buy in order to stay hedged. In that type of positive gamma environment, the market is more insulated to big moves because there is forced buying on the way down and there's forced selling on the way up from the market makers. When you go into a negative gamma environment, which is a more rare situation, the opposite actually occurs. In order for the market makers to stay hedged, they have to buy as the market moves higher and they have to sell as the market moves lower. So the ranges can increase, that there becomes a higher probability of trend days versus range days. There becomes a higher distribution of outcomes for the market. That's why we had a perfect storm here just last week, because options expiration hit, which greatly reduced the gamma, which happens every options cycle, every monthly expiration. It greatly reduced the positive gamma on the market, which enabled the market to begin to sell. Plus we got a catalyst from Tesla and Google that created even more selling, which breached, there's usually price levels where that gamma is changing. So you can be in a positive gamma environment, but if you break through that downside gamma, then you can flip at a certain point to it going negative, where all of a sudden those same market makers have to kind of do the opposite. BYON report, beats on EPS, beats on revenue, active customers, nice growth there. The last BYON report was a disaster. We've made significant progress in the past 150 days and will continue to execute on our plan to achieve growth and profitability. We are building each of our brands to leverage their legacy strengths while leaning into vast white space, whatever that means, to allow us to incrementally monetize these assets. We intend to utilize our intellectual property, vendor relationships, and technology platforms to generate significant capital returns through strategic and financial accretive partnerships and joint ventures. Blah, blah, blah. A lot of word soup. Thanks, Pat. Thanks for the reports, the information on the BYON reports, guys, everyone. Greatly appreciate it. Always know when your stock reports earnings. Yeah, Tracy. I think back to sizing again, it's a function of space risk and how many dollars you want to risk. Pat giving us the FFIV numbers. EPS is a nice B. Revenue's a B. They raised their guidance. Nice Q4 guide there on the EPS and the rev. Very nice. It's a great looking report from that FFIV on the surface. All right, I'm up to 5:17 p.m. now. Whew. From Jeff, if the QQQ is giving a sell signal, is it better to short the TQQQ or buy the SQQQ? I get that question a lot. And it's a good question. And the answer is, it kind of depends. I prefer to short the TQQQ to have decay on my side. Levered ETFs decay. Okay? So it's something to know. Levered ETFs decay. People mistakenly think that what a 3x leverage ETF means is that if the return over the course of the month of July for QQQ is positive 1%, that TQQQ is up 3% and SQQQ is down 3%. That will never be the case. if over the course of 1 month period of time, the TQQQ, sorry, if over the course of a 1 month period of time the QQQ is up 1%, the TQQQ will be up less than 3%. And the SQQQ will be down more than 3%. So reverse that on the short side, right? If the Qs go lower, the TQQQ short gets to take advantage of decay. The SQQQ long, you're fighting decay. So generally, I would rather have the decay on my side, but there's a big asterisk on it. What's your time frame on the trade, and what's your borrow ability look like? If it's just a day trade and the TQQQ is easy to borrow, I would rather short TQQQ than buy SQQQ so that I can have the decay on my side. But if it's just a day trade, there's not going to be that much decay to speak of. So you're not getting too much of an advantage. If it's a swing trade, then you're going to have much more of a decay advantage by being short TQQQ than being long SQQQ. But what's the borrow cost on the overnight on the TQQQ? Does it outweigh the decay? And that I don't know the answer to. I don't know the answer to that. Every time someone asks me that question, I'm like, someday I'll do the math and I'll try to figure out what the average month-over-month decay is on TQQQ versus the borrow cost to see if it's actually better or not. And I never have. Hope that helps Jeff. From Tom. To what extent the indicators will become ineffective? I don't really understand the question. To what extent the indicators will become ineffective? I don't really understand the question, but I can give you a general answer anyway. Indicators are indicators. All they do is indicate something. They are not the end-all be-all. You can't just buy because of a Bollinger Band or because of an RSI or because of a MACD. There will always be examples where that stuff fails. Indicators indicate something. They can be used as a layer of probability for when you like other things. If you already think that this is probably approaching an area where it's a counter trend buy, and the RSI is confirming it, and it's, outside the lower Bollinger Band, then you will have a higher probability than if you're hitting a point where you think that the counter trend buy is becoming a buy, but the RSI is not confirming it yet. It's just a layer of probability. So it's always effective and ineffective to the degree to which you properly use it based on all of the other information on the trade. Oh man, from Kirill, thinking about a better trading software that you can enter your game plan and it will automatically execute on your game plan even in the after hours. Think of it as an electronic assistant. Yeah, I think that you'd have to code that yourself at this point still. I know that on Lightspeed you can take an Excel spreadsheet and have all your orders auto input every morning just based off the Excel spreadsheet, but it won't come in and automatically put in the other side of those orders if you get filled on things. To do that, you really need to be connected to API. And what are some from Tom? What are some margin call examples, and what trading style would be a good fit for being a T3 trader? There's no such thing as a margin call for a prop trader. It's not a term. It's specific to retail. There's no such thing as a margin call. If you lose 50% of your capital, the firm is not necessarily asking you to put more money into the account. That's just not how it works. What trading style would be a good style for a T3 trader? Generally anything that's active, not, buy and hold investing is not going to be good. You want to, take advantage of the buying power and everything else that you're getting, so you need to have some sort of active trading strategy to implement. So it's pretty general, Tom. Again, Amber wrote down the address. Reach out to info@t3trading.com, and myself or someone on the business development team can get on the phone with you and really go through the benefits or potential lack thereof of prop trading for you individually as we get to know you better. From Deepak, do you know of simulated trading software where you can do simulated trades with previous historical real-time data so I can practice months and months in just a few weeks, preferably with option day and swing trades? I don't know anything like that at all, unfortunately. So, sorry. But maybe some other people on the team here do. Looks like Adam gave you a suggestion. Can you tell me how you use the RSI on the 5-minute time frame and the setting you use on the RSI? I don't use the RSI. That's a question that you want to ask Pat, because Pat uses the RSI. I don't use the RSI. My charts are very, very simple. I use Japanese candlesticks, volume, and a couple moving averages. I don't use any indicators. But I listen to the good traders on the team when they provide me the information from their indicators. I read Pat's technical portion of his note where he has Bollinger Bands and Ichimoto clouds, and I look at the information that come from them. I will sometimes, if I'm trading something counter trend, I will ask Pat what the RSI is on the 5-minute to see if he can confirm my idea and use it as a layer of probability. But personally, I don't have any indicators on my charts. Zero. Scrolling through the VTF. CrowdStrike had a headline after hours. It's down another $10 after hours. I missed the headline. If you want to repost it, I'd be interested. Pat gave you an answer on the RSI question. You can take a look at, Deepak. I am not going to suggest that you buy BYON in the after hours action in the sub move. The report looks like a solid beat, though. I'm surprised it's not at more. See what it does tomorrow. This name has the capacity to squeeze if it breaks higher, too. But let's reassess it in the morning. From Brandon, can you be long on a stock or fund but never have any of your money in the trade? Is that a put option? You still have to have some degree of buying power in order to like sell it. The way that you'd be like long with a put would be by selling it, and you're taking the money in of the premium, but it still requires like buying power in order to be able to execute that trade. So I'm gonna say no on that one. Sounds good, Jeff. Delta hired a law firm to seek damages from CrowdStrike. Well, then Delta should give out some more money from the disasters, and then go recoup it from CrowdStrike, because they're still ripping people off. But yeah, it must have cost Delta a boatload of money. Oh man, I'm beat. Oh, there's more questions in the YouTube. SoFi earnings tomorrow. I have responsibly loaded the boat. Let's go. Yeah, we'll see. I'm not sure what time they post tomorrow. Benjamin, you've mentioned unconscious competence in a previous video. Does that apply to your risk parameters as well? No, you want to have your risk parameters pretty solidly competent, consciously competent. You want to know what you're risking on every trade that you put on at all times for the most part. I didn't really get much hate on my football viewpoint. That's right. Sabori agrees with me. What do you think about shorting option? I assume you mean shorting option during earnings season. Doing anything into an earnings report is always gambling. Doing anything into an earnings report is always 100% of the time gambling. if you're going to do it with options, if you buy calls or buy puts, at least you're gambling and you know exactly how much money you're going to lose. But you need to realize what you're doing. If you are doing anything into an earnings report, you will never know what a stock is going to do in the report. You can have hunches, and I don't hate the idea of generally taking bearish bets on stocks that have had big up moves into reports, or generally taking bullish bets on stocks that have had big down moves in the reports for reasons I've previously discussed. But you got to recognize that you're still gambling. From BW Trades, just want to add to that. Appreciate you so much, and you have been so helpful in my trading for what it's worth. Awesome BW Trades. Really glad to hear that I'm able to help. Awesome. Keep up the good work. It's great stuff. All right, you guys have exhausted me. Thank you, Aiden. 7 a.m. tomorrow for SoFi. You guys have exhausted me with this 2-hour afternoon meeting. I'm gonna wrap it up there. Have a great night, everybody. I'll see you all tomorrow, bright and early.